So today in the markets, we had very similar to what we talked about in yesterday's video, where we had a slight pause, so to speak. We weren't going to have a big, massive move again because from a low of 198 to a high of 205 in just 2 trading days is not going to continue regardless of what's going on. It never even happened throughout this period right here. Or you go back to the previous debt ceiling of 2011, August 2011, didn't happen there either. So we had a slight pause, and if you take a look at the minute chart right here, go back, and it opened a little bit lower than it closed yesterday, but nothing absurd. Just going along the business, going along the day, and normal day. You know, some sideways trading, no big deal. And then around 3 o'clock, Warren Buffett comes out and says, we can't raise interest rates because the economy is not strong enough, or something like that. And then you can see what happens. Starts to take off. And I don't know, for those of you who've traded for years and years, and for even some of you decades, you've never seen a market like this, where whenever somebody comes out and says the economy is bad, the stock market takes off. Instead of the market is good, the stock market takes off, and the market is bad, the stock market tanks. I mean, because most of the people that are trading here know that if the economy starts going south, the only thing the Fed can do to save it, and the government can do, is to print money or spend money. Fiscal and monetary stimulus, which in both cases boosts the markets. Because when you're injecting liquidity, you're injecting inflation into the economy. It's going to make the value of your stock that much bigger. It's more M2 money supply because the value of those stocks is artificially pushed higher, and in theory boosts the economy, when in reality it just makes it sicker. But that's the world we live in, and we have to continue to worry about that on a daily basis. So now you can see something really strange happen right here at around 3:30 in the afternoon, and we've been accustomed to having this happen for the past couple of days. This took off at the end of the day, right there, from there to there. You go back another day, this thing takes off like a rocket from there to there, and then all the way up to there. You know, for those of you who think nothing happens at the end of the day and you just want to go home early and take your coffee, no thanks. There's profit to be had when you have moves like this. These are 30-point moves in the S&P in the span of half an hour. And then, you know, even back here. So for the past few weeks, something crazy always seems to happen at the end of the day trading. But here's today, and then after that, big tank. Now what happened right here at the end of the day? This happened to be Europe, right here. And now I'm going to explain what went on. And it has to do with the Greek banking sector over in Athens, with the new government that's anti-austerity, to say the least, when it comes to the Eurozone. So in essence, what happened from reading the headlines is that they said Greek debt can no longer be collateral to be used in Greek banks. And to the average person, that just goes over your head and you have no idea what that looks like. But let me explain what it means in layman's terms. So here is your Greek bank balance sheet. Right now, we're going to go ahead and say you want to make a deposit in the Greek bank of 1 mil euros, which is right now the currency in Greece, as with the rest of the Eurozone. So now you have 1 million in euros put in the bank. So the bank will owe you, or let's just say it's a group of people, buy in with 1 million euros. So there's a total of 1 million euros on deposit. So now with that 1 million euros, it can now issue debt. So debt of some sort. Let's say 5 mil of Greek debt issued to this Greek bank. Now, it didn't initially work out this way, but either as a fundamental description of the Eurozone when it first took place, or with the Greek bailout back in the earlier part of the decade, it was said that the ECB would let Greek debt be collateral in this bank, so it could loan out Greek debt. So it loans out this debt to whoever, and then they pay interest on the debt. Well, what happened today is that the European Central Bank just said that this $5 million in Greek debt, it doesn't count for collateral anymore. So right now, and there's other debt of some sort as an asset within the Greek bank, but right now this no longer exists. So now they have until February 11th before this Greek debt is canceled. So what does that mean? It could possibly mean that this 1 million euros over here for a liability right there, that might be more than its assets. And if there's a run on the Greek banks and people start depositing their euros or trying to withdraw their euros from this bank because I think it's going to fail, then this could significantly slash down to maybe 100,000 euros. Or so. And that's why you have runs on the banks when they think the assets on the Greek banks are no longer worth anything, and the Greek bank doesn't have enough coming in from its assets to pay out the liabilities. So, but in essence, what it looks like this: when you have an asset, somebody's paying you interest, and when that interest is how a commercial bank is going to make money, and then that interest is then paid out in a liability when there's a withdrawal. However, when there are more withdrawals than payments coming in, that can't match all the withdrawals that everybody comes out if everybody wants to withdraw their euros. So what does that mean? That means the bank fails, and if you didn't withdraw your euros, your deposits are now worthless. But that happens on February 11th, which is what the ECB just came out with. But another support system is the European Central Bank, which means if there aren't enough assets to match the liabilities or the withdrawals, then the European Central Bank can come in and print euros and put them in the Greek bank to save the banks. But that runs out on February 28th, unless Greece agrees to the terms of the austerity, which the Greek people just said no to. So in essence, if everything goes exactly as it's shaped out to right now, then all of the assets on the Greek bank balance sheet are going to become worthless, in the sense that interest rates are going dramatically higher, and there might not be enough assets to cover the withdrawals if there's a massive run on what they call run on the banks, where everybody withdraws their money immediately because they're not sure if the bank is going to fail or not. So unless the Greeks agree to the terms of the austerity, that's going to happen. And if that happens, it's possible for Greek banks to fail. It's possible for Greece to leave, at that point, to leave the Eurozone. A lot of things are uncertain, and when you ever have uncertainty, the markets don't like it. So there's a bit of a bargaining war going on right now, and the European Central Bank is saying, Greece, you're in debt to us, so you have to do what we say, because the creditor is always because the creditor is always privy to the lender. As part of the bailout agreement, Europe gave a bunch of euros to the Greeks in order for their banks to be saved. But Greece, on the other hand, says, well, we have all the leverage because you gave us all these euros. And so if we leave, you're stuck with the bill. It's the classic phrase of, if you owe the banks $10, you lose. If you owe the bank $10 million, the bank loses. Or it's the bank's problem instead of it being your problem. So there's a bit of a chess match going on. There's also talks with Russia to see if Europe isn't going to bail out Greece, then Russia might bail them out. But if nobody bails out Greece, they're going to have to leave the Eurozone. They're going to have to go back to the drachma, and they're going to have to deleverage because there's no way that Greece alone can pay the interest on the debt that is outstanding. And interest rates are going to rise yet again even further than they already have. So that's the mess that's going on. And whenever there's banking instability within the world, the markets don't like it. So that's what's going to go on within the next month. And this is all prior to the European QE, which could, I guess in theory, buy some of the Greek debt, although they've said that they aren't going to, but you never know. So there's a quandary, something to watch for over the next couple of weeks. And if the Greeks thought that European austerity was bad, wait till Greece leaves the Eurozone, if it happens, and see what austerity has to come from there. Because it's going to be a whole lot worse if Greece has to deleverage than it is if the European bails them out. But in the long run, it's going to be better for the Greek economy. It'll be more painful for their citizens. But if they do it the right way, they can come out on top better than the Eurozone. But the likelihood of them doing that with the government they just elected is pretty much slim to none. So expect more pain for the Greek people. So today's trade was on Tesla, and we said we're going to go up down on Tesla because we had two big up days. We had just finished an upwardly zigzag right there, and we said we wasn't going to go above 220. And given the market's direction, that it was we were looking for something that was going to do a pause of some sort, and we said our stop was at 222. So that's why we chose Tesla yesterday, and here's what happened. It opens right here, splits are tight between the bid asks, so I get in with a 215 put at, you see the price that I got in with, $1.99. That's what I got in with, and almost immediately there's a stop. It goes the other way. Goes the other way, and then as soon as I see this, the first thing I draw is my retracement right here, because it took 2 minutes to get up there and 3 minutes to come back down. I see that there's 61.8. It's kind of stuttering right here, and even when it starts going the other way, I'm not freaking out because I know what's going to happen. It's going to retrace, it's going to extend, and come right back down. So as soon as that happens and it makes a new high for the day, an intraday high I should say, what I do is I draw this right there. You can see the 61.8 retracement, supposed to hit the 100% extension, and in all theory, as soon as I see this down here, I could get in to go up to 220 from 218, but not enough of a profit, and there's too much risk involved when you gotta go on your broker and try and watch your put, but you're buying a call, you gotta sell the call and then watch for the put again. It's too much risk for not enough reward. You see what happens, goes all the way up here, and as soon as it gets up here, I see it's done with the extension, and we had an up move followed by 2 days where we had a significant up move. So I did something I don't think I've ever done before. I bought another put, because right now my puts are, the ask is $1.12, and I bought another put for $1.22 right here to make some profit on the way down, because even if it goes above our 222 level, I'm only losing a commission, because The volatility is still really, really high. You're not going up more than about a half to 3/4 of a point. So for me, the risk is okay, and I'm trying to get back some of what I lost in the end. So what ends up happening, we start going back down. So from a technical perspective, we're only supposed to hit that 61.8, and then after that, it's free game. Once that happens, I see the significant move back down. It continues to go back down, and even right around here, I'm break even for the day because I bought one at 199, bought another one at 122, and they're trading around 160 to 170 right here. But I'm gonna stay in because there's no technical reason to get out. Our target for the next macro wave from the daily chart back here is this 211 right there. So just in case it decides to do a big retracement and a big pullback, I'm ready for it. But what ends up happening right here is we have kind of a head and shoulders pattern where we have an up, a down, an up for the upward zigzag, and now we're going down with a zigzag. So what I do here, I draw another retracement right there, and we can see what happens right here. It doesn't go above that 78.6. It starts going back down again. So what I'm looking for right now is a target of about 217.5 right here. I'm going to go ahead and make this green right there. Green for the dollar signs, and there's our target right there. We're still in. We're still in as we continue to go along, and now we can see it starts going towards our target. Still kind of hovering around there. We're waiting for it. It's certainly possible at this point with a low right here of 217.77, which is less than 1/4 of a point away from our target. It's certainly possible that this thing goes back up, and we're ready for it if it does. But it didn't quite do that. So it hits our target right there. It's certainly possible for you to get out, and what I do is I draw a support line right there, or a resistance channel right here for this mono wave. It's a Wednesday. We can't stay in forever, but we do have some time. We can't wait till all the way out here to get out, because otherwise we're going to lose too much on theta. We're going to go down. We're going to continue to go down until that line is crossed. No matter what happens, no matter when it crosses, you're getting out. Right here it's close, very close, and then that happens. And then it hovers around a little bit. You never know, it might still drop a few points. And then right there, it crossed right there, and I got out, sold both of them for 212 right there. And then as soon as that happened, it went back up and just kind of went sideways, so to speak, for the rest of the day. This line doesn't matter. At the end of the day, it followed the market somewhat, went up, and then tanked. And that was your day on Tesla. So you bought one at 199. You bought another at 122. You sold them both for 212. And you made a 32% return. So even though it didn't go exactly as planned, you still made out with some money. Some 32% less a commission. So that's what happened today for this particular trade. In retrospect, what I would like to see is that given that the market went down, it opened lower, as well as the fact that Tesla went down 2 points at the end of the day yesterday, you're probably gonna want to wait up until it reaches the high right here. So next time we know that. But if it had it opened above where it closed yesterday, would have gone straight down. So 32% return on the day. Still making money. Could have done better, but you gotta take what you can get. Tomorrow our trade is going to be on Amazon, and what I'm looking at right here is a quasi resistance level. Spread this out a little bit. It's close to this one and nearly exactly on this one. We had a little bit of a pivot point today where today's high didn't exactly reach today's low. And what I'm counting on right now is that it's not going to go above 370. And with that, we're going to go down. Stop's going to be at 371.5. And then we're going to go down. But if it crosses above that, we're getting out. We haven't had very many down days recently in Amazon, although just because it's in a bullish trend that it automatically has to go down at some point. Not entirely. You can see the last couple of days the open's been significantly lower than the close of the previous day. If that happens again, don't get in this trade. Look for something else. However, given the volatility in the European markets at the moment, based on the ECB's announcement earlier today, it's anyone's guess where these futures are going to open, and I highly doubt they're going to open exactly where we closed today. So, given that in mind, it's hard to predict at this point before Europe's markets do their thing throughout the day where it's going to open, and that open is going to dictate what kind of trade we're going to make tomorrow. But if it closes at or above the high, or at or above the close of today, we're going to go down on Amazon because we don't think it's going to get above 368, and we're going to make our stop at 371. So that's going to be our trade tomorrow. And just as a couple extras, just a few more that I'll be looking at, although not necessarily trading. Alibaba, if this thing crosses the support channel of yesterday and then 3 days ago and 4 days ago, then we're going to go down. I'll be watching that, which is exactly at a computer resistance at 90. I'll also be looking at Google, as Google was in a massive downtrend, and then the earnings was this big up day right there, right here highlighted in blue. Since then, it's kind of struggled, even though the market has gone significantly further up, which doesn't exactly indicate positive buying pressure. So I'll be looking for that one to go down as well. But our trade is on Amazon. If that doesn't work out, I'm looking at Alibaba and I'm looking at Google. But either way, if we look back at our S&P chart, I see this technical channel right here between 206.5 and 198. It hasn't gotten above these levels in the past month per se. These are yearly highs actually, because this was well, I guess technically this was the first day of the new year, and the high was 206.88. But I don't believe that's gonna get crossed. Doesn't have enough fundamental pressure in it, as well as any injections of liquidity supporting it. But with that said, anybody can say anything to move these markets. It's any man's guess. Lots of volatility. So looking for opportunities in there. So Amazon's our trade tomorrow. Going bearish. Good luck tomorrow.